I'm going to be going over how I was able to make $500 trading the S&P 500, and I'll be showing my exact strategy on how I'm able to net high R trades and my reasonings and thoughts behind everything. So let's get into it. So pre-market plan, I post these in my Discord every morning before the market opens. So in the morning, what I was essentially watching for before I even got to my desk was we had CPI drop at 5:30, and you could see we were coming into this supply structure that formed from April 4th, and I'll be showing you how I was able to come up with that level. But basically, when news comes out, they usually like to gravitate towards areas of interest, and with that, it could trigger reactions and moves out of that. And as you can see here, CPI drop, we gravitated towards that 9.6 level. And where I got that level from was I use the market profile in combination with like the supply structure. So you can see here from April 4th, we had this upper distribution before an initiative moved down, and you can see here the time and volume spent at the 9.6s, and you can see there's a naked TPOC. And for the structure of that, it was from, again, like I said, April 4th, where we consolidated and triggered a move to the downside, which triggered. So that was the context coming in for the supply structure that I took a trade out of. And prior to the market open as well, I spotted offers sitting. You can see 622. I spotted offers sitting at that supply region that I was watching for. You could see it was strange activity. And usually when I'm watching the tape, I'm watching for unusual or strange activity. And you can see here, this is like a almost 10, let me see, almost an 8 to 10 point offer sitting at the highs, which is very unusual to see on the tape. And I've been able to build a relationship with the tape over the years, so to me this was very unusual. And this is what my charts looked like coming in at 624. You could see here I have other scenarios that I watch for as well, but at 6:29 a.m. the scenario that triggered for me today was the 9.6 supply zone, which, again, just to really recap, that massive move down from April 4th. And for context, price precedes news plus the offer stepping in on the tape. I wanted to find ways to play short, targeting the 8.5s and then this 7.4 pore structure, which I got from also the market profile. I can also show more detailed videos on how I use this. If you guys want to know more about it, just let me know as well. But going into the trade, this is where I update my thoughts intraday as the markets open and update my commentary. So my first trades came at prior to the 635 was when there was some aggressive buying coming in, and we popped back above this kind of consolidation from the CPI. And what I said and updated in the intraday commentary was there could be a possible peak above this range and fail, or we get acceptance off of that where buyers accept the higher prices and then we move off of that. And what happened was on the tape, we broke high of day into the 5303s, which aligned with the CPI highs. And off of that reaction, I got in with risking high of day. And again, like I said, targeting 8.5s, but what I was watching for was a low day break and this low to get broken first. Let's see here. I also used the DOM and footprint. There is some positive delta being transacted at the 5300s, and whenever a high gets taken out with strong aggressive buying and it fails, that's a sign of a lack of activity, because ideally you would want to see continuation off of that. But if there's no continuation off of that, that's a sign that the market could reverse, and that's exactly what I got in at. So here, immediately that reaction after strong selling came in, and I said to myself, I needed to see it under the 9.6s as it was acting as support. But after that, I ended up stopping out. You could see here, I'll put it on a 1 minute for you. I stopped out of that trade for a 3.25 loss. And immediately after, this is where many can put their head down and be like, oh, I stopped out, like my thesis is wrong, etc. But the worst thing you could do is put your head down after stopping out of a trade. Every trade is individual. It doesn't matter what is happening. If your thesis is still valid, you should be open to re-entering, and that's exactly what I was able to do. So I stopped out on this move up into high of day, and my thesis was still valid because it ended up proving to me that there were sellers again. And like I said here, look, we broke high of day once again, and you can see that strong buying and immediately failed after. So I got back in at the 1.50s, risking high of day again, and this time I actually had a better entry, risking 2.25 points. So I actually had a better risk reward. And for the cherry on top, the VIX was, you could see here, this was the overnight highs. So ES was attempting to break out above the overnight highs. VIX, let me pull it up. VIX was nowhere near the overnight lows, actually showing relative strength to the ES, which could hint at possible signs of a short-lived up move. And you can see where I entered was 640, 635 to 640. You can see how far off the VIX was to the overnight lows. And another piece of context was the NQ. And at the time I entered, which was right here, VIX put in a lower high and was nowhere near the overnight high. So that was putting all the pieces of the puzzle together and using other markets for confluences. And you could see here, after it worked out immediately in my favor, again, like I said, your classic high of day break. I'm just updating myself through the commentary. Like I said, see, NQ never broke above the highs. Said wanted to see a bid under the 9.6s, and once we got that low of daybreak, you could see here, I said the selling is very strong. I was going to press it into this low, since I was only in one contract, so it's kind of tougher to manage my position into like 8.5s. So just to scale. and target ended up triggering at the 8/8. You can see here in real time. Like I said, risk was only 2.25 points to make 13 off of that. So that's just showing the power of the tape, using context and confluence and proper preparation, because at the end of the day, that's what stems confidence in your setups. But the most important part out of it is the risk management part of it. I was only you can see the first loss, I lost $162, and that was a 3.25 risk. And comparing it to my winner, this eliminated that loss plus 6 times more, 5 times more off of that. And I was able to net 5.79 R out of it. So the lesson out of it is, don't put your head down after losing trades and just focus on the next setup, because at the end of the day, what matters is risk management, and that's all you can control out of the market. Just taking those high quality setups and not letting it interfere with your confidence. As long as you have that edge, you can't control the market outcome of your trades. You just got to keep taking the next setup and taking whatever comes to you. So if you guys want more recaps, feel free to let me know in the comments. I haven't been trading much this month, so I've been kind of risk off. You can see my calendar. I only taken 4 trading days. I have like 2 losing days out of the month. But yeah, just feel free to let me know. But I'll catch y'all.